Hello everybody, welcome back to another episode of Finance Agents Live. This is episode number 45. Today we're going to be talking about business term loans, SBA loans, traditional financing, the kind of financing that you love to get because the rates are so low. And we're going to be given specific examples of clients of ours that have gone through the process successfully. We'll be talking about, some surprise benefits that they have and some of the things you got to look out for, some of the issues we had to work through in order to make that happen. By the way, if it's your first time on the show, please subscribe. We appreciate your subscriptions, your likes. Help us help more people just like you. By the way, if you've been with the show in a while and you like the content, or maybe you're new and you just don't always have the time to sit down and watch the video, please check out our new podcast just launched. Go to anchor.fm/financeagents and you will find it there. We have loaded the first 10 episodes from this YouTube show, and we're going to be adding a lot more soon. So if you want to listen to it in the car, nothing I'd rather do than listen to my voice while I'm driving around town. You want to learn about finance, fun stuff? Go check it out. Subscribe to the podcast as well. Come back next week, and we're going to be giving you a special insider view of credit monitoring services. Over the last 10 years, we've seen literally hundreds of thousands of clients that have gone through different credit monitoring services because they provide the reports to us so we can give sort of a pre-qualification on what funding they qualify for. And we've seen the good ones, the bad ones, the ugly ones, the ones that are easy to sign up for, the ones that are almost impossible to drop. And we're going to be going through the different ones we know and talking about what's good and bad about them. So come back next week, set a reminder, and we will see you there. All right, so Rhoda, thank you for coming on to the show today.
Always a pleasure.
Rhoda runs our loan division. She has her fingers in a lot of different types of financing. The term loans is one that's she's especially fond of because it's such a long-term commitment. It's like having a baby, right? It can take 9 months to get one of these things out. So we're going to be going through those loans right now, giving examples. Some of the benefits, some of the reasons people love this kind of financing is long terms. You can get a 10-year loan up to 25 years with real estate. Lowest rates as low as, people are getting around 7.5% typically right now. They're adjustable, but it's much lower than some of the other types of financing. Because the payment is low and it's over a long term, you can actually get more funding. And you get monthly payments instead of the daily or weekly payments. It actually works for startups if you know what you're doing. And there's some cool benefits with acquisitions that we're going to be going over too, right?
Yeah, half full, glass half full, half empty on a couple of those, so we'll go into them.
All full if you ask me, all right? It's awesome. Anyway, they're great financing. If you qualify for it, awesome. If you don't, we can help tell you what you need to do in order to get there. Fortunately, some of the times it'll take a little time, like you might have to do an extra year in business and file next year's tax returns, but there is a way to do that where you can get much lower interest rates. All right, so let's jump into our first example. Why don't you tell us about this transportation engineering firm?
Yeah, this was a fun one to work on. He was actually involved in getting the Olympics to LA, and so he was really looking to ramp up. Then so we got the...
This was a part of that? This funding had some correlation with...
Yeah, he's working on some of the bids and improving the transportation in Southern California as part of the Olympics that are coming in 2028.
Good.
2028.
Any reason to improve the transportation in LA is a welcome.
Right, for sure. And so what was great about this one is that when I was researching it, I noticed that the time to fund was actually 1 year. So it was, when I say time to fund on these, I want to be careful that we know that it's the time that we first received the lead to the actual funding. I know it's not like from the commitment letter or from the LOI or anything. By the way, it's the entire span of our process.
Like the actual lead into the system or the time you get the application?
Once the lead is in the system, I went by the date the lead was created.
Right, which could be deceiving. Sometimes people fill in a lead form and then disappear for 6 months and call us back later.
Right.
So it's going to make these time to fund seem probably much worse than they really are, really, because that's really just up to somebody's timeline, right? But there are real delays that happen with this type of financing, and that's some of the stuff we're going to be talking about. If you wouldn't mind keeping that up.
On that one, I just want to say a couple things. That one, there were a couple hurdles they were going through. He was adding a partner. He had to file his taxes. There was a couple of different issues why it was so long. I would say the thing that drug it out the longest was he wanted to bring on a new partner. The partner wasn't sure that they wanted to sign for the term loan and things like that. But the big issue on this one was that why it almost fell apart is their cash flow was so great that they actually qualified for over $700,000 in funding. And
so good problem. The bank wanted to give him more money.
Right. Chief credit officer was like, $350,000 isn't going to do this guy any good. I'm just going to undercapitalize his business. He's going to need more too quickly. But with SBA loans, if you have a property, they need to secure that with a lien, and the borrower was not willing to put his house up as collateral. So talking about taking risks, this would have been a good risk to take, but he wasn't willing to do it, so we kind of worked through that with Chief Credit Officer and had to get him on board with the funding, and then we did the $350,000.
All right, so the good takeaway from that is he got almost $350,000 in funding without putting his home on as collateral. So if people are asking, can I get an SBA loan without providing additional collateral? Here is proof. It took a little bit longer. They wanted to give him more money. He said no, and we gave him less, and he still got a 10-year loan, 7.5% interest, and he's out there making the Olympics transportable.
Yeah.
All right?
Even on the LAX too.
LAX, please. Whatever you can do to make LAX better.
Yeah.
All right. Okay, so now we got another example. We went from somebody who qualified for $750,000 to somebody who ended up getting $57,000. This is a very different loan. So the last one was an SBA loan. This one's also an SBA loan. 5-year loan at 9.75% interest. So, looked like he had a pretty low FICO for getting SBA financing. So that's good news. We were able to help somebody there.
Right. The interesting thing about this is that all of his payments were on time. It was just the high debt ratio.
So he had low FICO and high debt utilization
That
ratio.
was what was causing the low FICO. It wasn't like missed payments or anything like that, or charge-offs or anything. It was just the high credit utilization, which the lender was comfortable with. And
Great.
so since
I'm
it was a
surprised,
smaller
actually.
amount, and they could secure it because the purchase was for 2 trucks. They also had good collateral. The business was strong. It had good net profit that we could get around.
Okay, so this is actually an equipment loan. As opposed to normal equipment financing, you go get an equipment lease. So the benefit of a loan is you can pay it off early, right? Whenever you want. Lease, you got to ride the whole thing out. So that's good news. So he had high debt. Do you remember if it was a bunch of maxed out personal credit cards? Or
Right. It was a bunch of
see that
maxed out
all
credit
the time.
cards. Maybe some student loans were also like high, but the credit utilization on those credit cards, which he had used for getting the business going.
Okay, great. Awesome. All right, well, that's good news. Here's another one. This is one that I personally worked on because it was a crazy, crazy file. So I'm not going to go into all the details about how crazy it is, but they originally came to us saying, you know what, we're doing $18 million a year. We want to get a $1 million line of credit is actually what they asked for originally. So I said, great, let's look into it. And then we had some really weird ownership structure issues, ownership in the Cayman Islands, another international owner.
No collateral.
Yeah, no collateral at all. The one U.S. partner had very light credit, nothing bad, just he was relatively young. But we were still able to fund it. It took 34 days. We got a $100,000 loan for 3 years. And that may not seem like a big deal, especially 24% interest, 23.99. But believe me, that was moving mountains. You would think somebody doing $18 million a year, it would be easy to get them a loan. But when you throw in enough weird stuff, it gets tough. The good news is we were able to find a way around it. Now, you looked at that deal. You took it to some places. What's the biggest thing that you ran into?
Ownership percentage with a foreign national being the owner. There's no real jurisdiction the U.S. can go into another country and try and collect payments. So that was why they didn't want to do it with the dual owners. Even though some lenders lend in Canada, the contract would be in the United States. So even though if it was 100% Canadian or 100% U.S., that would have been fine, but the split was the hard part.
Right, so if you're thinking about going into business with a Canadian, that's cool. Just know that you're never going to get a loan. It was an immediate denial from almost every lender we work with, which is weird, right? Because there's a bank was in the U.S. and Canada. There's some banks that are transnational, but they won't lend just because of the split ownership.
If he has a green card or some sort of residency status in the U.S., I think it would be okay, but because we have done that too. It's just that he didn't have residency status here.
Right. Okay, great. So that's an interesting one. Next, let's talk about the bakery, $1 million bakery.
$1 million bakery.
That's a lot.
It was a lot. They were moving to a second location. It was a wholesale bakery, and they did the bakery for the stadiums, the sports stadiums, and hotels and country clubs and things like that in Florida. And so they were moving to a second location and they needed to buy the equipment for the second location. They did a lot of high interest loans so that they could move into the second location and start generating revenue. So we had a lot of refinance.
Oh, so they had already moved and got...
They were doing the build out.
And got really high interest, those like daily payment loans.
Right.
And then so they were able to refinance them. That's cool. How much were they doing a year in revenue?
I don't remember that detail.
Okay.
I don't remember. A few million. I know, I'm sorry.
No, that's cool. So a few million, because you know the amount that you can get next to your revenue is an interesting factor for me. If they got $1 million on $3 million in revenue, that's would seem like kind of a high amount.
Well, yeah, but it's also, you can have a high annual gross, but then the net profit is really what we're going to use to underwrite the loan, is how much debt they can service with after they paid all expenses. So
right, my dad's old boss used to say, it's not how much goes through the system, it's how much sticks to the ribs, right? It's about net profit. Right, you like that? Time to fund, 206 days. Again, we don't know if that was necessarily because the lead came in and sat around for a long time, which happens all the time, but we were able to get it done, and that's what matters.
Right.
Declined at a national bank.
Yeah, so what happened originally, and this is hard, but is a borrower, you also realize, sometimes the first place we go isn't going to fund you, and so it was declined at a national bank, and we were able to work with some local banks who were more comfortable with the company. They knew the company, and they could feel comfortable moving forward. They could work with them. They walked the site. They did a lot of things that a national bank won't do, but the smaller local banks will.
Right, so even us, where we've been doing it for 10 years and funded over $1 billion in funding, and we know exactly where to go, doesn't mean you're necessarily going to get funded, but we know where to go next, right? Unfortunately, on your own, you could go to 10 different lenders and not even be close to somebody who could finance you. So that's one of the benefits you get from somebody who's experienced, as opposed to trying to do it on your own. In general, some local lenders are more likely to take a risk because they really understand the local economy. Then again, sometimes local lenders are, they have less access to funds and they're not able to take the same risk. So it really depends on where you go. All right, next example, we got a daycare. Tell me about the daycare. $350,000 for daycare. That seems like
yeah, I really liked this file. They were very pleasant borrowers, and they were buying the building there, and took a while, so we had to do the appraisal for the real estate, and we had to look at the assets or the financials of the business they were borrowing. What was great about this file is that the appraisal actually came back higher for the building than the sellers were asking, so we had a lot of room there to give them a little extra working capital.
You mean you were able to get a larger loan?
Yeah, because I think this one actually came in maybe slightly lower. And then we got them, I don't remember the details, but we were able to give them the full $350,000. If the appraisal had come in low, we could have possibly had to decrease the funding amount. Yeah,
that's just what I was referencing in the beginning, that there are some related benefits to going through the SBA process to do a business acquisition. Because when you go to buy that business, you're deciding whether or not it's worth the price, but the bank is also going to decide if it's worth the price. And if the bank decides that it's worth less, then you, instead of being frustrated, say, oh, the bank thinks it's less, that's a good time for you to go back to the seller and say, hey, I know you want $350,000. The bank says this is only worth $300,000. They will not approve it for more, and often negotiate a lower price. Right. Either a lower price or convince the seller to do a carryback on the difference. Either way, you're in a good negotiating position. The only risk would be a cash buyer comes in and buys the thing out, but maybe the cash buyer also recognizes that it's not worth that amount of money. So use the bank to help you in negotiating. And in this circumstance, the appraisal came in high, so they were able to get more funding, which is a great solution. Working capital is always hard to get, and good when you can get it. Mm-hmm. All right, hospice. Tell me about the hospice. $150,000. This was a bit of a wild ride. I remember this one for sure.
This one, we had two buyers. One had really low credit, so we had to restructure the ownership. It was originally 50-50. We had to take one of the owners to 19% because she didn't qualify. Another owner then went up to 81, but her income was low, so we had to add on multiple co-signers to get the income.
Multiple?
Yeah.
How many co-signers did you add on?
Mom, Dad.
Oh, wow.
And?
I
don't remember if there was another one.
Maybe more? Wow.
Yeah, I don't remember.
Okay, that's interesting.
And then they also had to secure both the borrower's house and her mother's house, so I don't know about that conversation.
The kitchen sink, they threw everything in there.
They did.
But they were able to do it. That's the important thing. And one of the things that's not on here is that we found out far into the process that the $150,000 that they needed was only half of the acquisition price or something like that, because the owner they were buying a license to do hospice, right, and then opening a new location. So it's sort of a startup acquisition. But the person selling them the license wanted a lot more money and was doing an owner carryback. They had some crazy monthly payment that
10,000.
they never would have been able to support it.
Right.
So through the funding process, we were able to help them negotiate a much lower payment on the person they were buying the license from, which really is a good thing. Otherwise, they never would have.
Right.
They never would have made it. Okay, great. Next we have a nail salon. Real interesting situation here. It was sort of like a new owner and an expansion at the same point. So
Right.
tell me about that.
I love this one too. I love all my borrowers, but this one, the original owner and her sister were operating this, and the original owner just gifted the salon to her sister 4 to 6 months prior to
That's a
applying.
great sister, right?
Yeah, I do it for my sister.
Give away a whole business,
So
huh?
it was sort of a new ownership, but since the business was cash flowing, we were able to help them get the loan for the second location. I think also one of the borrowers had a BK. The spouse had a BK, so that was another obstacle to overcome,
Really?
working through why he had a BK.
Was he a guarantor?
Yeah.
So you had a guarantor on there with a bankruptcy. Wow.
Yeah.
That is the first I've heard of that.
Yep.
And they got an SBA loan. It's amazing. All right, so but the principal borrower, the wife, she had good credit.
Mm-hmm.
Okay, interesting. All right, so yeah, all right. I
There
had no
you
idea. We got somebody
Gotcha.
gave somebody a business and got a loan with a BK. That's pretty amazing. Okay, personal training business. That's a lot of money for a personal What is this, like a franchise or something? Or?
No, they were taking over the lease from someone who had a business, so it was sort of an acquisition, and they needed money to take over the lease, because what they do is they have a space that they then kind of rent or sell
So this is
memberships
a
to a
gym.
personal trainer.
This is a gym, and they rent it out to personal trainers.
Yeah, and
Because otherwise, I was
physical
going to say, you know,
therapist and a chiropractor.
becoming a personal trainer is a very low overhead thing, right? You could just start doing it. You know what you're doing. If you could sell your services, you're a personal trainer. So the $318,000 was to acquire the lease and put equipment and do all the tenant improvements. Okay.
This one, it took a while because taking over a lease, and it was in New York City, so they had to negotiate a lease, and you can imagine the bumps going along negotiating a 10-year lease with a landlord in
Right.
New York City.
This is CakeFit was a franchise, right? If I remember correctly?
Yeah,
Okay.
I don't know if it's a franchise or a business itself. I
Okay,
don't know that
cool.
that's
Yeah, by the way, that name is just hilarious, CakeFit. It's sort of, anyway. All right, so it worked. Next, we got a juice franchise. This one's the local franchise that we work with, right? Juice It Up. All right, tell me about Juice It Up. $250,000 for juicers.
Yeah, this was for a second location, and this one took a while because it was also a lot of tenant improvement, so they had to do a lot of work. First, they came in early trying to get, pre-qualified, and then they had to work through contractor and architects to make sure that the build out was appropriate. So doing the construction loans, it takes a long time because you have to make sure that the contractors are insured. You have to make sure that it meets the franchise specs, and then that everything is up to date with the SBA.
And we help the client through every step of the process, right? So, how many times were you involved in those types of things? What was your role in helping somebody make sure the contractors are licensed? So, what was that like?
That can get hard because I understand how busy contractors are, and if I could do it for them, I definitely would. But it's just, trying to be a gentle reminder. Can you send me this? Because they won't get paid unless we have the insurance, or walking someone through how to fill out the withdrawal request and things like that. So
Okay.
Trying to be another voice.
So the first location was doing well already, right? Cash flowing, had plenty of net profit, and that's what they had to look at. They had to look to see that the first location had sufficient net profit to debt service the loan for the second location, right? Okay, great. All right, and then last but not least, we got a doctor's office, got a little over $1 million. What kind of a doctor?
General practitioner. What was interesting about this one is that they were working with an outside provider who was doing allergy shots, or allergy medicine, and that outside provider wasn't billing properly, and so then someone came in and kind of put a fine or bad debt on them, and some lenders saw that as a fine or a lien. When it wasn't a lien, it was just back payments due to a provider, and so this is another one that got declined originally, and then we had to place it with another lender.
All right, so this happened before they came to us. When they came to us wanting to Was that debt part of what they refinanced? So they would go through that with a fine-tooth comb. So the billing person in their office was screwing up and coding everything correctly.
But it was an outside person too.
And they had to pay a bunch of money back, like $400,000 if I remember correctly, right?
Like that, yeah.
Right, okay. So yeah, that is a challenging thing to get through. But you did it. That's the goal. We refinanced it and got them on their way, and now they are happy. All right, well, that's it. So we don't have any questions for the day. Reminder to come back and check out the Credit Monitoring Services show next week. We're going to go through Credit Karma, NAV, Credit Check Total, and if you have any specific ones you want to know about, feel free to shoot us an email. Shoot me an email at info@financeagents.com. Let me know if there's a specific site you want to know about, and we'll go through that in detail. Reminder to subscribe to the show or like it. If you liked anything Rhoda did, a like for the show is a like for Rhoda. Let Rhoda know that she's awesome. Like her by liking the show.
I'm not going to personalize it that much, but thanks.
100%. All right. Anyway, thanks everybody for coming on. We appreciate everything you do, and we look forward to doing a lot more deals together.